Good morning, ladies and gentlemen. Happy Friday to everyone in the house. Oh, well, it's the last trading day of the week. Let's confirm that we are good to go this morning. So, if you can see my screen and you can hear my voice clearly, kindly type in hi in the comment section so that we can get this session started. So I would like to see some feedbacks in the comment section, please. If you can see my screen and you can hear my voice, kindly type in hi in the comment section. Let's get this started. Okay, what do we have here? Okay, Fancia, good morning, thank you. Hadimwen, good morning. Lukata, Zarahem, 587. All right, Francisco, I see you. 860, thank you. Hey, Carrie, it's happy Friday. Good morning to you too, as well. Glad to have you around. I'm excited to welcome you to another promising session on the Extra and Speed Live. My name is Sheriff Daramola, and for the next 1 hour, I will be your host, where we shall be embarking on a trading journey, evaluating the financial market using technical parameters to identify trading opportunities lining up for us today. Well, today is Friday. This is the last trading day of the week, and it's always peculiar with the market that things will happen a little bit different from the normal that has been happening throughout the week. And one thing about Fridays is the fact that most of the time price always moves in the opposite direction, and this is as a reflection of those who admit profit during the course of the week in a particular direction will definitely want to be taking some profit, and this will be reflected on the chart as price moving in the opposite of where it has been going since the beginning of the week. So we are going to be looking at how we want to be managing our trades today, how we are going to be securing our positions, and how we intend to take advantage of any trading opportunity if the market presents it to us. And for those who are joining us for the first time, you are welcome on board. Glad to have you around. And what we simply do here on a daily basis is to gather here in anticipation of the New York session, identify trading opportunities, map out structures, and position ourselves in such a way that we can catch any potential opportunity during the New York session. Though it might look a little bit complicated at first, but I assure you with time, just try to stay tuned in throughout the course of the session and continue to join us 10 a.m. UTC on a daily basis. And if you do so, with time, you get to understand how this works, and you will be able to use the information you've gotten here to make your individual decision on all the instruments we discuss here. So on this note, I welcome you once again, and let's dive into the market at this point. Well, the first thing we want to be looking at this moment, remember we had a couple of macroeconomic events for yesterday, which has sent some ripple in the market, and we have been seeing some traction in the dollars in the dollar in that regard. So yesterday we had the GDP, and I was able to highlight some ideas or situations that happened during the course of yesterday's trading session. And here we are. I was able to highlight three. And according to the GDP data that was released yesterday, you all know that the GDP always showcases the monetary value of all the goods, services, and structure in the United States. And what we had yesterday was the data was downly revised to 2.7% as against the previous data for the last quarter of last year, which was at 2.9%. So we had a whooping negative variance of minus 1.71, and the immediate reaction to the market was quite impressive, as we saw a huge bullish traction in the first hour after that event before we saw the dive back to the downside. Then we also had the personal consumption expenditure prices, which rose about 3.7%, while the core reading came in at 4.3%, higher than the 3.9% gain from the third quarter of 2022. Then figures further fuel speculations that the U.S. Federal Reserve will continue to hike rates in the coming meetings, while a potential pivot on monetary policy is further away. So we have seen this was what has happened in the last 24 hours, and obviously we want to be looking at the market from a technical standpoint to decipher how the market is going to be reacting to this development. So stay tuned in, try to pick up, sit back, and let's dive into the market structure. So as usual, the first commodity we are going to be talking about today is the US oil. And on the US oil here, we want to take a retrospect into how the week started for us on the US oil commodity. So at the beginning of the week, we were lucky enough to identify a beautiful flat channel between the $77.90 area and the $76.35. And what this simply does for us is that it helps us to gauge and position ourselves to take advantage of any trading opportunity. And whenever we have a channel like this, all we want to be doing is to remain patient and wait out for either a breakout or breakdown of that channel for trading opportunity. However, at the beginning of the week, we saw the breakout of the $77.90 level, which retest of structure giving us an opportunity to buy. So we had our buy position triggered, and price action moved about 60 to 75 pips in our favor before we started seeing the selling pressure resume around the $77.40 level. And as a result of this, we had a new resistance point sitting around the $77.40 area. As you can see, every attempt by the buyers to break out of the structure has been met with strong resistance from the sellers. And as a result of this selling pressure that resumed around the $77.40 level, we saw a situation which led price action into the breakdown of that $76.35 level. Remember, that level was our support level at the beginning of the week as we continue to see buy pressure around that area. And with a breakdown retest of that $76.35 level, we discussed this at the beginning of the week. We said a breakdown or breakout of that channel will be giving us a trading opportunity. And with the breakdown retest of the structure, it triggered our self-stop order, and at this point we had a position running in the bearish direction. And in fact, price action moved about 250 or 60 pips in our favor before we started seeing the accumulation of bullish momentum around the $73.85 level. So we added some sell position below the $76 area. We also added below the $75 area as well. So we had 3 positions running. So for that one, if you had all the maximized positions, then definitely you will be running with about 400 pips on that single sell position that we had on Tuesday. Now, during the live session yesterday, we were at a situation where price was initially caught within a channel between the $74.30 level and the $73.85 area to emphasize the indecision. And with a further dissection of the structure within that channel, we noticed that we had a double bottom structure, which from a technical standpoint is a strong reversal pattern. And looking at the neckline of that reversal pattern, which falls exactly at the $74.30 level, you will see that it shared a beautiful confluence with the bearish trend line that has been guiding selling pressure since the beginning of the week. So you can see the trend line here. After we connected the series of lower highs, we had that trend line figured out. And with the breakout of that trend line, it was a beautiful signal for us to join a rally to the upside. And since then, price action had continued to find higher highs. And prior to the live session yesterday, we were around this area right above the structure, and I said you could buy above that point, but if you had missed out on this opportunity, then we have two situations to look out for more opportunities. And one of the situations is that we should be patient. That price might likely come back to do a retest of structure before another wave of bullish momentum will happen. So that is the first one we were looking forward to, which did not happen. Then the second one was that we should have our buy stop orders sitting right above the $75 level here, where a breakout retest of structure will definitely be giving us an opportunity to add more position to our existing trade. And this was exactly what happened 3 hours into the New York session yesterday, as we saw price action break out the $75 level. And in fact, if you had missed out on the first breakout, price action gave us another opportunity as we saw a retest of that structure, which incited another wave of bullish momentum. And if you had joined from that level, you would currently be running with about 140 pips. So kudos to you for being on standby to catch that one. Then I also identified the structure here at the $76 level, which was broken to the downside a couple of days ago, and we said we want to be seeing how price action will be reacting to that level. And if you remember vividly, I told you that as soon as price tests the $76 level, we want to be moving our stop loss accordingly to secure both this position that we had running at that point. And this was exactly what happened. We moved our stop loss accordingly as price action was caught within a consolidation phase around that area. A breakout retest of the $76 level triggered another position at this point. So we have three positions running in this market, with the last position right now running with about 47 pips in profit. So at this point, I will be advising you to secure this current position that we have running right now. And if you had been in the three positions we are, you want to be moving your stop loss to somewhere right below the $75.80 area to secure this current position as we continue to monitor the current price action. Now, price is right around the $76.35 level. And at this point, it's very important that I state here that we are at a critical confluence in this market. And as a result of this, we need to be very, very patient in order to know if we are going to be adding more position to our existing buy position, or we might be getting ready to join a decline from that level. And talking about being a critical confluence, what do I mean by that? Well, if you look at the structure here, and you can see we have the $76.35 level, which is the support level for the flat channel we identified at the beginning of the week. Remember, and you can look at what happened here on Tuesday. We saw the breakdown retest of that structure, which gave us that opportunity to sell the US oil on Tuesday. Now we have a situation right now where price is back into that support level that was broken on Tuesday. And you all know that from a technical standpoint, whenever we do have a breakdown of structure, there is a likelihood that price action will climb back to a retest of that structure in anticipation of another wave of bearish momentum. So there is a likelihood that we could be having selling pressure here. And in fact, if we zoom in to see what has been happening here in the last 3 hours, you will see that we have been noticing some selling pressure around that area. So as a result of this, I told you that we should be moving all our stop loss for all the buy positions we have right below this area as we continue to monitor our participants in this market will be reacting to the $76.35 level, which has been a strong selling niche in the past. So now talking about a confluence here, look at this trend line that we have here. It also shares a confluence with the $76.35. Now, to have a better perspective into what the trend line looks like, I would like us to scale up a little bit into the 4 hours time frame. Now, looking at what we have here on the 4 hours time frame and look at what happened since last week's trading session, it is obvious that price action had been bearish in the last 2 weeks. And if we connect the series of lower highs here, this is what we have. We have a beautiful bearish trend line which has been guiding the selling pressure. And like I showed you on the 1 hour time frame, price action is back into that trend line area, which also shares a confluence with the support level that was broken at the beginning of the week, making this area a critical point where patience is hereby required. So there are 2 things that could happen from this area. We could have a situation where a reversal pattern is identified below the trend line on our lower time frame to incite a bearish momentum to the downside, and at the same time respect that bearish trend line one more time. Another thing that could happen here is price action could transition into a trend continuation pattern, breaking out of that bearish trend line to give us a signal that the trend line may no longer have the capacity to continue to hold selling pressure. And as a result of this will be triggering an opportunity to add more position to our existing trade. So with the information we have here, you would agree with me that we are at a critical point in this market. So in order to trade the US oil, we need to understand what has been going on here in the last how many hours is this? This is like 6 hours now. Right, we have been witnessing selling pressure around that area. So we want to be scaling down to a much more lower time frame to see what market structured price action has evolved or transitioned into to make a decision for today. So in that regard, we shall be scaling back down into the 1 hour time frame, and let's see if we can have a structure to play around with. So this is the 1 hour time frame here. We really do not have anything much here to anticipate any trading opportunity. But one fact here is that we have this shooting star candle, which is a beautiful sign that sellers are still very strong in this particular level, that is the $76.35 area. Now, since we cannot really have a major structure here, I will be advising us to scale down to a much more lower time frame to look out for market structure. And you can see what we have here on the 15 minutes time frame. It appears that price action is evolving into a reversal pattern around this area. Look at what happened here a couple of hours ago. We saw selling pressure around the $76.35 level, sharing a beautiful confluence with that bearish trend line we identified on the 4 hours time frame. And if we look at this very well and taking into consideration the impulsive move that led price into the $76.35 level, you can see that price action appeared to be transitioning into a potential reversal pattern which is yet to be mature at this point. And the only thing that will make this reversal pattern mature is the inability of price action to break out the previous high. And if a breakout of the previous high is not possible and price action continues to drop to the downside back into the $76 level, then it's at this point we have a reversal pattern whereby we will be waiting for a breakdown of the $76 level to give us a confirmation that our sellers have come to stay again. And if that happens, we want to be joining that decline to the downside. So this is what we are going to be looking forward to sell the US oil for today. So what this simply means is that if it so happens that price action drops below the $76 level at any point in time during the New York session today, followed by selling pressure below this level, we'll definitely want to be jumping in a sell position on the US oil. However, if this the breakout of the $76.35 level happens, remember that level shares a beautiful confluence with that bearish trend line we identified on the 4 hours time frame. So if price action breaks out the previous structure, that is takes out the sell position right around this area, then that will be a good signal that the trend line may no longer have the capacity to continue to hold bullish momentum. And if this happens, we want to be looking out for a retest of structure. Remember, if we do have a breakout of that trend line, we are not getting too excited at this point. We are at a critical point where a breakout could turn out to be a false breakout. So we need some further confirmation to happen before we want to be joining that bullish momentum, and this might likely come in the form of a retest of structure. So once the breakout of structure happens, you want to be scaling down to a much lower time frame to look out for a retest of that level, after which we look out for buying pressure. Then we want to be joining that rally to the upside, and if this leads to a further breakout of the $77.90 level, we definitely want to be adding more position to our existing trade. So this is what we are looking forward to on the US oil for today. Ensure that the buy position that we have running since yesterday is secured by moving your stop loss accordingly, and we wait out for a breakdown of the $76 level for selling opportunities on the US oil. And if this is not what happens, price action breaks out of the previous high, then this will be a beautiful bullish signal where we shall be anticipating a bullish momentum from that level. So if you do have any questions regarding what I just explained so far, feel free to drop your inquiries in the comment section while I move on to the next pair. So the next option we are going to be looking at this morning is the US tech. Now on the US tech, price has been quite choppy in the last 24 hours here. And talking about the US tech, how we started the week on the US tech, this is the situation we had at the beginning of this week. So at the beginning of the week, we identified that price action was caught within a channel, further emphasizing the indecision in this market at the beginning of the week, and this was as a result of low liquidity in the market. Remember that we had the US president's holiday, which was observed by the market. The stock market was closed, the bond market was closed as well, so there was low liquidity in the market to drive price movement, and as a result of this, we saw this consolidation phase between the $12,370 and the $12,320 level. And you all know that in this community, whenever we have a flat channel like this, all we want to be doing is to remain patient and wait out for either a breakout or breakdown of that channel to give us a trading opportunity. And exactly what happened on Tuesday was the breakdown of the 12,320 level, which triggered our sell stop order right below the support level of the channel as price action moved all the way down in our direction with about how many pips was that? That was about 290 pips, approximately 300 pips in that direction. Then on Wednesday, wasn't on Tuesday's live session, we had our TP target for that first position triggered here at the 12,200 level. Then we saw price do a retest, retracement back into the structure. And as at Tuesday's live session, we identified a sell window here where we said if we start seeing reversal patterns around that area, we shall definitely be anticipating an opportunity to sell. And to further make things simple for us during the New York session on Tuesday, I identified the structure at the 12,240 level where I said we are going to be selling below that level, and if price action further breaks down the 12,200 level, we shall be adding more position to our existing trade. And we were lucky enough to be part of this position as price action moved in our direction, and we had about, how many pips was that? About 200 pips on that first position there, and the second position gave us about 150 pips thereabout. So well done to everyone who have been part of this. So we have been quite profitable on the US tech so far for this week. And now one thing came in that made this whole structure more interesting is the fact that as soon as price tested the $12,030 level, we begin to see a huge consolidation phase here that lasted about 72 hours here. So between Wednesday, I think between the later part of Tuesday and Thursday, we had a situation where price consolidated within that area, and it looked more like buyers are gradually coming in this market. And if we take a further zoom out into the structure, you will see our price has evolved into an ascending channel within this area. Now, as a result of the GDP events that happened yesterday, we saw this huge volatility in the market, which took us out of all positions that we had in this market, and it took quite a while for market to come back into normalcy here as price action came back into that $12,200 level, retested that structure, and I hope that you are part of that position as price action dropped to the downside. Personally, I missed out on this one, but if you did taking advantage of that opportunity, well done to you for being on standby to catch that move, as you will currently be running with a minimum of 100 pips in profit at this point. So my advice for you, if you are still in the sell position on this one, you want to be securing your current position by moving your stop loss to somewhere around the 12,150 level to secure this current sell position. So now that we are heading into the New York session today, what is going to be our plans here? Well, before I go into the details of what our expectation will be like for today, I would like us to scale up a little bit into a higher time frame, like the 4 hours time frame, where I want to be showing you a simple setup that was identified there at the beginning of the week, and this will also be in favor of those who missed out at the beginning of the week. So at the beginning of the week, we had the situation here. Remember, the US tech has been bullish since the beginning of the year, and to further buttress the strength of the buyers here, we connected the series of higher lows, which gave us this simple bullish trend line that we have here. And one thing you will notice here is that this trend line had consistently held on to a buying opportunity, as anytime price drops into that structure, we have been seeing bullish momentum from that area. And not until last week's trading session, we saw the final breakdown of that bullish trend line, which gave us a signal that the trend line no longer has the capacity to continue to hold bullish momentum. And this was as a result of the continued selling pressure that was noticed around the 12,900 level area, which has been negating all attempt by the buyers to break out of that level. And this had led to the breakdown of that demand zone that we have here at the 12,200 level. So you can see how important that structure has been. So since the beginning of this month, we have been witnessing bullish momentum as soon as price broke out of the 12,200 level. So we saw retest of structure. So the 12,200 level had been a strong demand zone in this market, especially since the beginning of this month. And with the situation that happened here this week, price action breaking down that demand zone, it's a beautiful signal that sellers are likely coming in this market. And what we have seen here in the last 72 hours was a breakdown of that demand zone at the 12,200, price action coming back to retest that structure, which suits perfectly with our technical expectation, followed by selling pressure below that level to further emphasize the strength of the sellers at this point. And this is likely going to be inciting a sell-off in this market. So as a result of this information we have gathered here on the 4 hours time frame, it's very important that we position ourselves so that we can catch this bearish momentum as it continues to the downside. And for those who had sold below the 12,200, I have told you to secure your current position by moving your stop loss accordingly to secure this current position. And for those of us who had missed out on this opportunity, we shall be looking at the possibilities of the market giving us a second chance to be able to join that decline to the downside. So what we are going to be doing right now is to dissect what is really going on around here, then decide using the market structure there to make an informed decision for today. So we have a key structure sitting around here, which is the $12,110 level. As you can see, during the course of the week, it has been a strong selling niche in the past before the breakout happened. So if price action breaks down the 12,110 level, then definitely we want to be looking out for selling pressure below the structure to join or add more position to our existing trade. And another thing that buttresses the possibilities of a selling momentum here is the fact that, remember, I showed you on the 1 hour time frame that we have an ascending channel here, where the support level of this ascending channel is sitting around this area. Now it shares a confluence with the $12,100 level, and if price action breaches the support level here, then definitely it will be a beautiful opportunity to join the decline. So what we are going to be doing now is to scale down to the 1 hour time frame, where we want to see how price action is currently reacting to that structure we identified here. So I would like to zoom in further so that we can see things more clearly. So we have a yardstick for trading activity for today. So the $12,110 level is going to be a beautiful structure that we shall be using to guide trading activity for today. And one thing also we should take note of is the fact that it shares a confluence with the support line of that ascending channel, which appear to have been broken in the last 3 hours. So right now, since we already have a breakdown of the structure, well, for those who are taking advantage of this breakdown, well done to you for being on standby to catch that one. But if you had missed that one, you could sell right away from now, or wait out for retest of the structure at one point in time to join that trend continuation to the downside. So anywhere below the $12,100 level seems most appropriate to have our sell position running at this point. So you could have your stop loss somewhere around the $12,175 level. Now the current structure we have here has a potential of giving us multiple entries. As you can see here, we do have a structure around the $12,030 level, which has been a strong demand zone during the course of this week. So we will need a further breakdown of that level to give us further confirmation of the strength of the sellers at this particular point in the market. So what we are going to be looking forward to add more position to our existing trade is a further breakdown of the 12,330 level, selling pressure below the structure. Then we are good to be selling the US tech. So the US tech for today, our buyers for today is more bearish, and we continue to look out for selling opportunities below the $12,110 area. Now the question is this: I always say how much we need to be very flexible whenever we are making decisions in the financial market. The market is very fluid, and to be profitable and to be consistently profitable in the financial market, we must tend to be very flexible as well. So if we had made a decision to go in a particular direction, and if the market is tending to dictate otherwise, it is our duty to identify this quickly so that we can join the new direction that price action is heading to. So in as much as we are looking forward to selling opportunity here, there is a likelihood that the breakdown of this trend line might turn out to be a false breakdown. And if it turns out to be a false breakdown, we might see a situation where price will climb back up, taking us out of all the sell positions there. And if this happens, price action climbs back above the 12,110 level, followed by buying pressure above the structure, which also shares a confluence with the trend line of the support line of that ascending channel. We might likely be seeing another opportunity to join a bullish momentum, hereby respecting that ascending channel one more time. So these are things we want to be taking into consideration while we look out for selling opportunities on this one. So what this setup simply telling us is that we continue to look out for selling opportunity if price action remains below the $12,110 level. But as soon as price climb above the structure, we shall be shifting our focus to buying opportunity above that trend line. So I hope we'll be on standby to catch this move when it happens. Then I always say here that to make things easier, you might want to screenshot my screen so that you can use it as a reference point when you're about to make your individual decision. So that is that on the US tech. If you have questions, feel free to drop your inquiries in the comment section. Now, moving on, we are going to be talking about the USDJPY, which finally has been moving in the direction that we have been projecting since the beginning of the week. So since the beginning of the week, the USDJPY has been quite choppy for us here, as we have seen a situation where price has been caught within the channel around the 135.00 level and the 134.500 area. And prior to that event, prior to the situation here, we have been buying the USDJPY. Remember, at the beginning of the week, we had this channel around the 134.500 and the 134.150. And one thing we saw about the 134 area was that we saw accumulation of buy pressure around this area, with the hopes that a bullish momentum will come in from this level, and position ourselves in such a way that a breakout retest of the 134.150 level will be an opportunity to buy the USDJPY. And in fact, that was exactly what happened on Tuesday morning. We saw the breakout retest of the structure, triggering our buy position, and we went on to continue to add more position at the breakout of structures like the 134.500 level and the 134.700 area. However, during the later part of Tuesday, we started seeing another wave of selling pressure. Remember, we had moved our stop loss for the 3 buy positions we had to somewhere around the 134.500, which I indicated during our live session on Tuesday. So we were taken out of all the buy position around here with some small profit anyways, and this was as a result of the continued selling pressure around the 135.00 level. As you can see here, all attempts by the buyers to break out of that structure had been negated by sellers at every point in time. So during the live session yesterday, we had the situation running where I told you that we had the buy position running here during the live session. Okay, sorry. I think during the live session we had the situation here. And one thing I said during the live session yesterday, I want to try to look at the live session yesterday. So that yesterday was Thursday, right? And we were around here. Okay, so during the live session yesterday, we had the buy position running prior to the live session as price action broke out of that bearish trend line that we had here. So we had the breakout retest of the structure, which triggered the buy position for us, and we were at this point when I told you yesterday that we should move our stop loss to break even around the 134.700 with the hopes that the GDP data will give us a favorable liquidity in the market that will push price to finally break out of the 135 level where I told you to place a buy stop order at. And exactly this is what happened. Price action broke out of the 135.00 level, triggering our buy stop order, and in fact price moved about 37 pips in profit in our direction before this sell momentum came in. And I hope you did move your stop loss accordingly to secure that current position, as if you had done so, price action would definitely have taken you out with some small profit, and in a worst case scenario probably at break even. So, and I told you yesterday that if price action goes on further to break down the 134.700 level, we shall definitely be looking out for selling opportunity. And I cautioned us about the sell position we want to be entering here, that we want to see price action break down that trend line significantly well, wait for further confirmation in the form of a retest of structure before we want to be joining that decline to the downside. And if you had followed my instruction, you would definitely had a sell position triggered here where price action moved about 20 pips, 25 pips in our favor before those bullish momentum happened. Though I shared this on my public platform, we were taken out of the sell position here, where I said a breakout of the 134.700 level will be triggering another position, as we have something like a reversal pattern around this area. If you look closely, you will see the sharp rejection of this trend line, bringing price back into the structure. Now we have a higher low, and as a result of this, we said we are going to be buying above the 134.700. Now if you look at the structure I showed you on my 4 hours time frame yesterday, and looking at what has been happening on this chart since the beginning of the month, you will see that price action had been bullish, and as a result of this, we had this ascending channel figured out at this point. And one thing I stated there yesterday was that if it so happens that price action breaks down that structure which I identified on the 1 hour time frame at the 134.700, followed by selling pressure below that structure, it might be a retracement phase into the support level to incite another wave of bullish momentum. But if we look at the structure closely here, you will see that as soon as price broke down that structure, it ended up with a bullish candle. It's more like a hammer candle, which is a signal from a technical standpoint that buyers are still very, very strong in this market. So as a result of that, I shared this on my public platform that we want to be buying above the 134.700 level, and I hope you are able to catch that move as price action broke out of that level. And since then, we have seen the situation here where price action had continued to find higher highs. So currently, with the first position broken at the 134.700, price action is running with about 40 pips in profit at this point. Now we have another sell composition triggered at the breakout of the 35 level, which is going to be the third time price will, I think, okay, the fourth time price will ever have broken out of the 135.00 area. And remember, the breakout of the 135.00 area is the first time price will ever get to this level this year. And I told you something yesterday that price action, the buyer still needs some time to acclimatize around this level in order to gain some stability to continue to find higher highs. And you can see prior to this moment, we have been seeing selling pressure resume around that area at every time price action break out of that level. So we need to be very, very careful here, as the breakout of this 135 happened here in the last couple of hours. So in that regard, we shall be moving our stop loss to secure this current position, and the most appropriate area to move our stop loss here is somewhere right below the 135.950 level, so that we can give room for price action to break. Now, one thing I'll be looking forward to during the New York session today is buy pressure above this level. So if you had missed out on this opportunity, I would advise you to remain patient and let's wait out for the market to give us another opportunity to join this potential rally. Remember, we have this bullish trend line here. So we shall be using this trend line as a yardstick for trading activity for today, which led to the breakout of the 135. So I will be extending the trend line a little further into the future so that it can cover the scope of what our expectation is for today. So like I said, if you had missed out on this opportunity, so we have the 135 level around here. So if you had missed out on this opportunity, I would be advising you to remain patient to see if the market will at one point come back to do a retest of the 135.00 level. And you can see it also shares a beautiful confluence with that bullish trend line. So we want to see price action do a retest of that structure, and immediately you scale down to your lower time frame. Look out for buying pressure above this level to give us a confirmation to join the second wave of that bullish momentum. So that is one scenario we are going to be looking forward to. So we wait for price action to come down into the structure. Look out for buying pressure on your lower time frame, then you could join the rally to the upside. Now, if that does not happen and instead price action continues to find higher highs, how do we intend to take advantage of that move? Well, if we bring out our line chart here, the highest point we have right now is at the 135.270 level, which I will be identifying here for the sake of visual understanding. So we have the 135.270, so I'll be labeling this so that we can use it as a yardstick for trading activity. So we have the 135.250 level. That's another resistance point we want to be looking forward to. So if it so happens that price does not come back to drop below the 135 before that bullish momentum happen, then we want to be looking out for buying opportunity and at the breakout of the 135.270 level to join a trend continuation to the upside. So let's be on standby to take advantage of this opportunity. So we are in for a bullish momentum for the New York session today. So our bullish bias here still holds for the USDJPY. Now, we need to be very fluid too as well, as we need to take into consideration other possibilities that could happen in this market. Now, since I told you that we are going to be using this bullish trend line as a yardstick for trading activity for today, what this simply means is that if price action continue to trade above that bullish trend line and the 135.00 level, we will be comfortable in our buy position. But if it so happens that price action drops below the 135.00 level, breaking down that bullish trend line, then this might be a signal that the trend line no longer have the strength to continue to hold buying pressure in this market. So if this happens, remember, we are not getting too excited, as we need further confirmation, which is likely going to come in the form of a retest of this trend line or the 135.00 level, selling pressure on our lower time frame below the structures, then we could actually join a decline to the downside. Remember, the below the 135.00 level has been a strong selling niche in this market in the last couple of weeks. So if price action ever drops back below that level, then definitely we are fall within the territory of the sellers, and there is a high chance that selling opportunities will be coming below that level. So let's use the bullish trend line and the 135.00 level as a yardstick for trading activity today. So what this simply means, if price trades above the 135.0 level, we remain comfortable in our buy position. And if price action breaks down the 135.00 area, retest of structure, selling pressure identified on our lower time frame, then we shall be getting ready to join a bearish momentum to the downside. So that is my view there on the USDJPY. If you do have any questions, feel free to drop your inquiries in the comment section. So I will look through the comment section for the next 10 to 15 seconds before I move on to the next pair. Okay, I can see Realtor 1723. Good morning to you. Sergio, hello, how are you? All right, so in the absence of no questions, I want to assume that we are on the same page here. So I will be moving on to the next pair. So the next pair we are looking at this morning, I don't think we didn't take the XAU USD. We didn't. I think we did take hold on a second. I think we went on to talk about the GBPJPY, I guess, which was introduced to us by someone in the house. We gave us an opportunity to trade this after a while that we haven't been doing so on this GBPJPY. So the GBPJPY has been profitable for us since the beginning of it. If we take a total net of what we have made on the GBPJPY, we are on the positive side of our portfolio on this one. Remember, at the beginning of the week, we identify. Okay, let me quickly run through the daily time frame, as this is more of a higher perspective on the GBPJPY. So on the daily time frame here, if we look at what has been happening since the last quarter of last year, you will see that price has been finding lower heights. And to further emphasize this, we connected the series of lower highs here to give us that bearish trend line you can see on your screen. But we can't say that this is a bearish momentum here because of the fact that we are yet to find lower lows. This is the lowest point price has been throughout last year at the 154.00 level, and since then this happened in September. Price is yet to break down that structure, and what we saw is a higher low as price action continued to reject the 156.00 level, and this lasted about 2 months in this market before we saw the situation that happened at the beginning of the week as price action broke out of the 162 level. And one thing we said about this area was that it's looking more like a reversal pattern if we take into consideration this impulsive move. And whenever we have a reversal pattern like this, you know what we do next? We normally look out for a neckline, which we shall definitely be using to guide a trading opportunity. And we were lucky enough to position a neckline area at the 162.00 level, where we were expecting a breakout of that neckline to give us a signal that the reversal pattern is now valid. A retest of structure should definitely be welcoming additional position on this one. And if we scale down to the 4 hours time frame here, this is what we saw. Let me zoom out so that we can see things more clearly. So on Tuesday, we saw the final breakout of the structure. So we bought the GBPJPY above the 161.500 level. We had another position there above the 161.850 level, and we had a situation where price came within the 163.500 with a total of over 300 pips plus on the GBPJPY before a new consolidation phase was identified here during our live session on Wednesday. And one thing I told us here on, let's go back to the 1 hour time frame. One thing I told us here on, was it not on Tuesday? Okay, on Wednesday morning, I told us that following the flat channel we have here, where price was caught within the range around the 163.500 level and the 163.00 area, and you all know what we look out for whenever we have this flat channel like this. We wait out for either a breakout or breakdown of the channel to give us a trading opportunity. And what we saw here on Wednesday was quite interesting, as we saw the breakout of the 163.00 level, and in fact the market gave us multiple opportunities to join that decline to the downside. So if you had missed the first one, it gave us second, it gave us a third one, it gave us a fourth, fifth one. In fact, it was quite impressive as we joined that move all the way down. Now, prior to Thursday's live session, we had identified a buy zone area around here, where we said if price action drops back into the 162.00 level, we shall be looking out for buying opportunity. And what buttressed that idea was the fact that we had a breakout of the 162 here on Tuesday. And you all know from a technical standpoint, whenever we have this kind of perspective, we expect at one point price might likely come back to a retest of that structure to incite another wave of bullish momentum. So we had a simple position setup here during the live session yesterday. So we had the neckline at the 162.400, and I think we scaled down to the lower time frame, identified the reversal pattern here, and we said we are going to be joining the breakout of the 162.400. And this was exactly what happened during the first hour of the New York session yesterday, as we saw price action move about 50 pips in our direction before this sell momentum came in to take us out of that current position. And I hope you moved your stop loss accordingly to secure your position, as you would have been taken out with some small profit, and in a worst case scenario probably at break even. Now that we have the situation running and we have the sell momentum breaking down the 162.00 level, then the potential buy zone here no longer is necessary, as it has been breached to the downside and we no longer need it anymore. So I have deleted it from the structure. So now that we are going into the New York session today, what is going to be our plans? How do we intend to take advantage of any trading opportunity here? So yesterday we saw the breakdown of the 162, which triggered a sell position where price action moved about 70-80 pips in our direction before this bullish momentum came in. Now what we have seen here in the last 24 hours is quite interesting, as we can see that as soon as price got into the structure at the 161.500, we begin to see some buy pressure around that area. And if we look at the previous impulse leg that led into that situation, we can see that we have something here that looks more like an inverse head and shoulder pattern, which from a technical standpoint is a strong reversal pattern. And whenever we have such a pattern like this, the next thing we want to be doing is to identify a neckline area which we'll be using to guide trading activity. So a breakout of the neckline area will confirm that this reversal pattern is now valid. Now, we saw the breakout of that structure during the early hours of today, and if you are taking advantage of that move there, well done to have taken advantage of that move. Move your stop loss right now to your entry point. Now, since we are the breakout of the neckline right now, there is a likelihood that price will come back, do a retest of the structure by pressure of the neckline area in anticipation of another wave of bullish momentum. But there is a caveat to this current structure, and what is that? Well, if we look at this structure here and zoom out to what has been happening here since last week Thursday, you will see that we have a bullish trend line. Price action had consistently respected that bullish trend line, not until yesterday that we saw the breakdown of that structure. And you all know, whenever we do have a breakdown of structure like this, there is a high chance that price will come back, do a retest of structure to incite another wave of bearish momentum. So this structure we have here is dictating a possible bullish momentum, and at the same time dictating a selling opportunity. So how do we intend to trade this going into the New York session? Well, the first thing I'll be doing here is to readjust this trend line to fit into the current structure. And if we connect the series of lower highs here, you will see that we have a beautiful trend line showing us how price action has been bearish since Wednesday of this week. And if we bring out our candle chart, we should be able to readjust this and have something like this. So we have a bearish trend line which price action has consistently respected in the last 72 hours on the GBPJPY. So we are at a situation right now where price is currently trading around the resistance level of that bearish trend line. So we want to see how price action will react to that level to decide if we truly are going to be buying the GBPJPY or probably getting ready to join another wave of bearish momentum since we had the breakdown of the structure. And looking at the confluence of this bearish trend line here, it also shares a beautiful confluence also with that bullish trend line that we have here. So at this point, around the 182.500 is a critical point in this market where we need to understand how price action will be reacting to that level to decide what our next line of action will be. So for me now, we want to be looking at the last 2 hours to see what is going on here. Let's see what market structure is bringing us from that level. Then we could decide what our next line of action will be. So in order to do this, we will scale down to a much more lower time frame, like the 15 minutes time frame. Let's see what is going on around that area. So this is the 15 minutes time frame here, and what I'll be doing on the 15 minutes time frame is to identify. We can see price is going through a consolidation phase following the breakout of the 162 level. We have seen this oscillation of price action, so we don't know if this is going to turn out to be a reversal pattern or a trend continuation pattern. So what we are going to be doing now is to identify that structure, and the first thing I will be doing is to identify the support level of that structure, which falls around the 162.300 area. So I'll be giving this a blue color to differentiate it from the previous structures. And then we have we have this area at 162.350. Let's label it for the sake of clarity. So I'll be giving this a blue color too as well. Place it at the bottom right hand side of my screen. Now we have another level here at the 162.650. 62.650. at the top right hand side of our screen. So we have price action within this range at this point. Now you all know what we look out for whenever we have this kind of range. Now, in addition to that, also looking at what has been happening here since the beginning of today, connecting the series of lower highs. Hold on a second. I don't think. Okay, let me see. If I use my line chart, I get this, but if I use my candle chart, I get something different. But let's just use this and see. And I would like to embolden this so that we can see the significance of this trend line going into the New York session. So what this simply means is this. Remember, we have the 162 level, which is the neckline of that reversal pattern we identified earlier, which we said we might likely see price action drop into that trend, into that neckline area before another wave of bullish momentum happen. Now, if a breakdown of the 162.350 happens here, if you are a scalper, you might want to join that decline to the downside, which can fetch you about 30 pips, which is not much anyways. But at this point, I'm not comfortable taking that kind of position. So I will only sell the GBPJPY if I see price action break down both the 162.00 level and that bullish trend line that we've identified here to give me a signal that the trend line is not strong enough to hold bullish momentum, after which I will be looking forward to selling pressure below the structure of my lower time frame to join that decline to the downside. That's the only reason why I will be selling the GBPJPY at this point. Now, if the breakdown of the 162.350 happens, I'm of the opinion that we might have a situation where price would drop back into the 162 area, at a level which shares a confluence with that bullish trend line. By pressure above the structure in our lower time frame, then we could join a trend continuation to the upside. So this is what I'm looking forward to on the GBPJPY. And for those who are taking advantage of this breakout, I have told you to move your stop loss to your entry point, where we want to see how price action will be reacting to this level if it comes into that structure. If it comes in there, we wait out and see how price action react to that level, which will definitely, whatever structure is formed around that area will definitely be what will decide if we are going to be adding more position to our buy position or getting ready to join a selling, a bearish momentum. Now, if price action does not do this, that is, does not drop below the 162, but instead continues to find higher highs, then a breakout of the 162.650 level will be an opportunity to add more position to our buy trade. So these are my views here on the GBPJPY. I'm already 6 minutes out of time, and I would like to take a quick recap of what we talked about today for the sake of those who missed out on the early part of this session. So doing a quick recap, the first commodity we talked about today is the US oil, and I told you we are in a buy position currently on the US oil, and we were able to identify a confluence around $76.35 level, which I said if we scale up into the 4 hours time frame, we can see how that level has been a strong selling niche in this market. Now, looking at the trend line here, when we scale up into the 4 hours time frame, and after connecting the series of lower highs here since the beginning of last week's trading session, we saw the bearish trend line here, and I told you that at this point we need to see how price action will be reacting to that trend line to decide if we are going to be adding more position to our buy position here, or probably getting ready to join a bullish momentum if a breakout of that trend line happens. Now, when we scale back down to our 1 hour time frame here, this is what we saw. And for us that we took advantage of the bullish momentum above the $74.30 level yesterday, I have told you that we should move our stop loss to somewhere right below the 75. Was it the $75.70 level? I said we should move our stop loss right below that level to give room for price action to breach. So for those who had been on this buy position, ensure that your stop loss has been moved accordingly to lock in and secure your current position. And one thing I stated here is that if selling pressure resumes here, then definitely we want to be anticipating a selling opportunity. And if we take into consideration what has been happening here since the beginning of the week, we saw the breakdown retest of the $76 level, and we said from a technical standpoint there is a likelihood that price will come back, do a retest of that structure to incite another wave. And what we are seeing here in the last couple of hours is quite interesting. As you can see, selling pressure appeared to have resumed around that area, and I told you a breakdown of the $76 level should trigger a sell position here. So if you had triggered a sell position here, it's okay, no problem, it's good. Just have your stop loss right above this level at the $75.48 level or $76.500 level, and let's see how this is going to play out. So if you had missed out on this one, then you might want to be patient to look out for retest of structure to join that decline to the downside. And if we are selling at this point, please note that we have a bullish trend line here, which if price action gets into that trend line, we want to move our stop loss to secure the current sell position as we wait out and see how price action will be reacting to this trend line to decide if we are going to be adding more position to our sell position, and that will happen if a breakdown of that trend line happens. But if buying pressure resumes above the trend line, then definitely we might be getting ready to join another wave of bullish momentum. So let's be on standby to catch any of these opportunity. Now, we went on to talk about the US tech too, and we have a situation where price is trading within the sell area that we said. If you are in the sell position right now, well done to you guys. I told you that anywhere below the $12,110 level, we want to be comfortable in our sell position. And if price action breaks above this level, climbs above the support line of that ascending channel, this will welcome a bullish bias on the US tech. But the way things are going right now is looking more bearish. As remember, I showed you on the 4 hours time frame how price action has broken down a strong demand zone here, did a retest of structure with significant selling pressure around that area to signal this move, and a further breakdown of the support line of this ascending channel buttresses the fact that sellers are still very strong in this market. So we're looking forward to a further breakdown of this buy zone here at the $12,030 level to add more position to the sell trade. Then we went on to talk about the USDJPY, where we have a key structure at the 135 level and the bullish trend line here to guide our current bullish momentum. And I said here that if price action continues to trade above 135 level and this bullish trend line, we shall be comfortable in our buy position. And for the buy position we have here, we have two positions running currently, and I told you to have moved your stop loss somewhere below the 134.900 level, giving room for price action to breed, with the hopes that we might be seeing another breakout of the new resistant level identified at the 135.270 level to add more position to our existing trade. However, I told you that if we have a situation where price action takes us out of all our buy positions here, leading to the breakdown of that bullish trend line, which also shares a confluence with the 135.00 level, we shall definitely be looking out for selling opportunities at the appearance of reversal pattern below the 135.00 area. And to further emphasize the strength of the sellers around this area, I showed you what has been happening below the 135.00 level in the last couple of weeks. You can see it has been a strong selling niche in this market. So if a breakdown of the structure happened, remember, we are not getting excited at the outright breakdown. We are going to be patient and wait for price action to do a retest of that level before we want to be joining any selling opportunity here. Then we went on to close the day with the, okay, I think we talked about the XAUUSD. Okay, we didn't. So we went on to close the day with the GBPJPY, where we already identified a simple setup here on the 15 minutes time frame, which I said we want to be using to guide trading opportunity. And for those who had bought above the 162 level, I have told you to move your stop loss accordingly to secure this current position. Now what I'm saying here is my position on the GBPJPY still remains bullish here, and I said even if price action breaks down the 162.350 level to the downside, it's very likely that price will come back to retest the neckline that was broken earlier this morning, which also shares a confluence with our trend line to incite another wave of bullish momentum. So we want to be on standby to catch a buy opportunity if price action comes within this level. However, I stated that I will only be selling the GBPJPY if I see price action break down the 162 level, which also shares a confluence with our bullish trend line, selling pressure below the structure on our lower time frame. Then we want to be joining that decline to the downside. This is the only time I will be thinking of selling the GBPJPY for today. Now, I said if price action does not drop to the downside but instead continue to find higher highs, then we want to position ourselves above the 162.650 level to join the next wave of potential rally on the GBPJPY. So these are my views here so far on the pairs we have been monitoring since the beginning of the week. So it has been a wonderful, beautiful moment with you guys. I really appreciate your rapt attention as you stay tuned in till the end of the session. So I want to wish you best of luck during the New York session today, and I hope that you are able to munch my screen so that you can use it as a reference point when you are about to make your decision for today. On this note, I wish you best of luck, and I hope to see you same time on Monday, 10 a.m. UTC, 11 a.m. West African time, as we come here once again to begin the new week on a positive note by reviewing and choosing pairs that we want to be monitoring for the new week. I wish you a wonderful weekend and merry evening to you all. My Gigi, I see you. Thank you. You're welcome. Do have a wonderful day, everyone. Bye-bye.